So if you watched the video that I posted yesterday, I clearly stated the best level to buy call options on the SPY to buy the dip was at $397.89. As you can see, when this level hit right before power hour, this was the exact low of day on the SPY for a massive spike in call options all the way to $399. So you're probably wondering, how is it possible that we're able to have a strategy and have a trading plan where we're able to consistently know where the low of day is going to be, we know where it's going to spike a day before it actually happens. Therefore, we're preparing to trade the best setups at the best prices. We're setting price alerts on our smartwatch so we can do whatever it is that we want to do and don't even have to pull out our phone. Once the price alert triggers, we trade the best setups at the best prices. How is this possible? How are we getting in right before the massive spike? I'm going to show you in this video. I'm going to teach you the strategy step by step. Not only am I going to teach you that strategy, but I'm going to show you a 30-minute pattern, a 30-minute strategy that we used to make a very lucrative trading return on calls before the gap fill today as the lotto trade. Then towards the end of this video, I'm going to continue to prepare you to trade the best setups at those prices. So if you're serious about becoming a self-sufficient trader, if you're serious about making money and getting that next trading plan, make sure you stay to the end of this video. So we're going to start off with the recap. So in terms of the plan, this is the trading system that we have within Trader Society. We have the key levels. The key levels are the best setups at the best prices. As we had clearly stated, there's a gap to fill at $397.89. What does all that mean? How do you identify the gaps? I'm going to show you in this video. This is the best level for calls. This is the best level for buy the dip. It was the exact lows called out a day in advance, right? So I'm going to teach you that. And then I traded the plan in terms of best setups to best prices. I alert them here. I alerted calls towards the lows right here at 2:43 p.m. And then in the SPY floor, I kept adding to the calls as it was having a small drop below my entry. I'm going to teach you all this stuff. And then I'm going to show you a pattern as well. So look, before we get into how to buy the low and how to use the gap strategy, I'm going to show you a 30-minute pattern. I'm going to show you a 30-minute pattern very, very quick. And I use this 30-minute pattern to buy calls before the gap build for a very, very nice spike. So this is what I do in terms of 30-minute patterns. Will, why are the 30-minute candlesticks important? The reason why 30-minute candlesticks are important is the pattern is going to help dictate the next 30 minutes worth of price action. And within 30 minutes worth of price action, if the candle's bearish, there's going to be a couple opportunities to scalp puts by getting in on rips, by getting in on spikes. If the pattern's bullish, there's going to be a couple opportunities to scalp calls on dips within those 30 minutes. So 30-minute patterns are going to help dictate the next 30 minutes of overall direction. When you're using 30-minute candlesticks, you want to use them at the bottom and at the top of the channels. You want to avoid the middle, right? So this right here, this was a support level. On the left-hand side, you are looking at the SPY chart today, right? On the right-hand side, you're probably looking at this right now and you're saying, Will, is this the same exact day? No, this is February 24th. So my question to you is, how many of you watching this video went back to February 24th and identified this 30-minute pattern? Because we called this out in real time. Check this out. See the bearish wick, see the bearish candle, see the bearish wick, see the bearish candle. See the two slanted red bearish shooting star doji candles. See the two bearish slanted red doji candles. There's a pattern forming. Do you see the resemblance, right? And this was at a support level. This was towards the bottom of the channel. It was close to the gap, so it's at support. What I tell you, you want to use 30-minute patterns at the low end and at the high end for the channels. At the low end, at the support channels, you want to be call focused. At the high end, at the resistance channels, you want to be put focused. But the patterns must be, bullish and bearish, right? So what I identified was, I said, okay, bearish wick, two slanted bearish wicks, two slanted bearish wicks. Will, what happens on the fourth candlestick? This is the fourth candlestick right here. What happens? As you could see, it bottoms and it has a massive spike. What happens on the fourth candle? As you could see, it bottoms and it has a massive spike. So guess what happened? When SPY closed this 30-minute candle, red bearish wick, there was a lot of people in the chat who said, this looks very bearish. And this is what I told him. I told him, first of all, we're at support. And then I told him, go back to February 24th and you tell me, is this the same exact pattern? And I said, yes, this is the same exact pattern. You have these 3 bearish slanted candlesticks. You have these 3 bearish slanted candlesticks. What happens on the 4th candlestick? It has a major spike. So by going back throughout history and identifying this pattern and then comparing that pattern to what was occurring right now, I was able to buy call options on the opening at the lows on this 4th candle. Do you see how I do that? I capture trends. I capture patterns. How many of you knew about this pattern? I didn't learn about this pattern by reading books. I didn't pick up a book and read this pattern. Okay, 3 slanted bearish candlesticks. No, what I did was I said, okay, SPYs at support. You have these 3 bearish slanted candlesticks. Let's go back throughout the 30-minute chart and see if I can find some sort of pattern because we're at support. Let's see if there's some sort of pattern. So I went back to February 24th and I said, this is the same exact pattern. Time to buy calls. Luck, it's not accident. No, this doesn't happen by luck. It's not accident. You need to wait for something to develop and you need to trade the best setups to best prices. So that's why I decided to buy calls on the opening of this candle before it was super bullish and sell into the spike. Now, how do we trade the best setups to best prices? So what I just showed you, that's a pattern idea. That's a lotto trade. It's not the best setup at those prices, but it's a strong pattern that I use to confirm something was bullish, right? And you can use these patterns that I'm giving you with the best setups at the best prices. So with that being said, how was I able to buy call options at the low of day, a day in advance? Why did I say to buy call options at 397.89, right? This is the reason why. As you can see right here, this is a gap. Will, what is a gap? A gap is when a stock opens up higher or lower than it previously closes. So you could see right here, right? This line divides the day. So on this day, the SPY closed at like 397.89, right? It closed right around that 397.80 level. And the next day, it opened up higher than it previously closed. That means it gapped up. It opened up higher. It was trading during extended hours. After hours, pre-market, volume was trading, maybe news came out, it had a gap up, right? So what I do is when a stock gaps up, which means it opens up higher than it previously closes, this is what I do. I go back to the previous day's closing price and I say, okay, there's a gap to fill right here. So on this date, it was March 2nd. So I go to March 2nd and I say, okay, it gapped up. Where's the gap? It's at the closing price. So if we go to March 2nd, you can visually see right here. Let's zoom out a little bit, right? So you can visually see right here, if we go to March 2nd, there is a gap, the closing price, 397.81. So there's a gap to fill at 397.81. Now, why was I bullish in advance before the gap filled? Why did I want to buy calls at the gap before it filled? Why did I want to buy calls right at the gap when it fills? Why did I want to do that? This is why. The SPY had a massive breakout. So the SPY broke above resistance. You could see there's resistance at 399. It had a massive breakout to $407. And then it quickly dropped back to the gap. So wouldn't it make sense for a stock to bounce at the previous resistance level if it has a massive breakout above the resistance level? Don't you think it would make sense for that previous resistance right here at the gap to react as a support level if it has a massive breakout and then instantly just drops right back down? Yes, because when a stock breaks above resistance and has a massive breakout, if it drops right back down to that previous resistance, it's going to try to bounce and react as a support level for a quick scalp because it already had a massive breakout. That is why, and also because of this, gap close reversals is a real thing. The reason why I'm targeting gaps is because they tend to be at the best prices if you trade them at the best prices towards the lower end of the channels, right? So on this channel where the gap was, this wasn't at a good level to buy call options. Right here it wasn't, but it ended up being a gap and go and had a massive breakout, right? So if it's going to come back down to the previous resistance where it was topping, it's going to try to bounce and react as a support level. You could see there was a gap to fill right here. There was a gap at 404. Oh, it didn't have a reversal when it closed the gap there because it's in the middle. What did I tell you about the middle? I told you stay away from the middle. Stay away from the middle. If 404 is in the middle, the peak's at 407, the middle's at 404, Where's the best price to buy the dip? The best price to buy the dip is at the previous resistance level where it had a massive breakout, which is at the gap. It's aligned with the gap and the resistance at 397.79. Since it had a massive pullback, it should try to spike, right? And gap close reversals. When stocks close their gap, if it forms a floor at support, this is now the bottom end of the channel because it had a massive breakout. It used to be resistance, but now it's considered the bottom of the channel because it had a massive breakout. Doesn't mean it's the actual bottom, but for the short term, it is a bottom, and that was a great scalping opportunity, right? So that's where you buy calls. That's where you hit calls. You don't hit calls at 404 because it's in the middle. It's not at the best price. The best price is at that lower gap towards the previous resistance where it triggered a massive breakout. Look, was there some sort of massive breakout right here at 404? No, it went to 407. There was a massive breakout right here at 397. You go with the oversold ones, the lower end of the channels. That's where when that gap fills, it's going to try to form a floor and it's going to try to have a reversal, right? And we did puts yesterday at the higher gap. You can use this both ways on a short side. There was a gap to fill right here at $400 and 726. We had people swing trade puts because it filled the gap and it formed a bearish candlestick. That's confirmation of swing puts. I didn't swing puts, but I day traded puts and made money. But I didn't swing puts because I wanted this higher gap. I wanted the higher gap at 408, right? But if you don't want to, if you're comfortable with risking another dollar for the reward, then you could take a starter position there and just get in. That's completely fine. If you want to do that, you can go at further expirations and do completely fine swing trading that. All the power to you. At least you're on the right side of the trade. If you're not in at the exact best price, it looks bearish and it closed the gap, right? So that's what I need you to focus on. I need you to focus on identifying oversold and overbought gaps, right? So I want you to focus on the lower end of the channels, 5-day chart, on the daily chart. I want you to focus on the higher end of the channels where that resistance is, and play the gap close reversals. This is very simple stuff. Now, one of the reasons why I was also bullish as well, so this is why I was bullish on the gap today. Previous resistance reacted as it should react as a support level because the SPY had a massive breakout. So if it's going to rug right back down, then previous resistance should turn into support, right? Another reason why I was so bullish when many people were bearish in the chat, a lot of new people as well, people were giving me some flack because it had a small pullback. I started buying at like 398. It dropped to 397.63. The gap was at 397.80. Look, man, I don't care. I'm not here to nickel and dime it. I have a larger account, man. I have a large account. I don't care if I get in a quarter too early. I see the potential. The risk to reward is there, right? It had a small little drop. I didn't get stopped out. I added because I saw that as a gift because the strategy says it's going to try to have a reversal. It's oversold, and this is what made me confident as well. The time it happened at. If SPY is oversold, right, towards the low end of the channel at support, and it's filling a gap towards power hour, it's going to try to spike. 3 p.m. is a key time where the SPY is going to try to spike. So if SPY is overbought at resistance and it's towards a higher gap, it's going to try to crash, especially at the volatile times market open or power hour. If SPY is oversold, it's towards the support, it's going to try to spike. So it just made sense, man. It was consolidating. It wasn't crashing that much. It kept bouncing towards the gap. It had a trend reversal bullish candlestick right here. And then you have this one big green bar right at power hour. Like I told people, this is a power hour play for 3 p.m. That's when the volume comes in. That's when it spikes. I don't mind if I get in a little bit earlier. I'm not here to nickel and dime it. I don't need to get in at the exact bottom. I knew where the exact bottom was, but I got in a little bit higher at like 398. I told people best entry is 397.80s, right? I don't care if I get in a quarter early. I have a large account and I could just average down and hold it a little bit. My max pain was low 397. That was the absolute most I was willing to risk on this trade. But as you can see, if you look at this from a macro point of view, I was buying right here and I was adding right here. Look at your downside potential and look at your upside potential. Wouldn't you agree that there is so much more upside potential with calls on an oversold level, even if it looks bearish, right? When this looks bearish, I was buying calls here because I knew 3 p.m. power hour, it's going to try to spike. It's at the gap, it's going to try to spike. They always push it lower and hunt for stop losses before it has the massive spike. They always do that. As this was dropping below my entry, I was laughing and I was adding more to calls because I knew the play was a gap close reversal. previous resistance should react to support because it was the first time, the initial first time, write that down, it was being tested. It should bounce. Gap, close reversal, 3 p.m. it's oversold, going to try to spike, the volume's coming in. It was aligned perfectly for a 3 p.m. spike reversal. So you got to pay attention to the times as well. So what was my confirmation to buy calls? Very, very simple. 3 p.m., it's a reversal spike time if SPY is oversold. That's one reason right there. This right here is previous resistance at 397.81. There was a gap to fill here as well. What do we know about previous resistance? If the SPY has a massive breakout above previous resistance and it crashes right back down to previous resistance, it's going to try to bounce the first time, because they're going to try to turn previous resistance into support. They're going to create a battle. A fake floor essentially, where it's going to bounce for a scalp. Doesn't mean it's bullish, but it should bounce because it had such a big breakout and it's the first time it's being tested. So they're going to try to turn and battle that previous resistance into a support level. Doesn't mean it's actually bullish, but they're going to try to create some sort of fake floor, some sort of spike initially for the first time. I don't hold my hopes. I get in, I get out, I get the best entries, right? And that's the game, man. That's the game. So that's the trades. That's how you trade the best setups at the best prices. Now, what is the game plan, man? So I put you onto the best information, man. Those two things, what I gave you in terms of this video, I showed you some of the basics to the gap trading strategy. It's a gap close reversal strategy where the gap closes at an oversold or overbought level. It's going to try to have a reversal, right? And I also showed you 30-minute patterns. What I do is I look at 30-minute candlesticks, and when they're oversold or overbought towards my key levels, right, I look for some sort of pattern, and I identified that pattern, right? This pattern right here. This was very, very simple. I didn't learn this in a book. I learned this by reading the chart, man. Look at this. This right here on the left is February 24th. You see this? Just look at this. You don't need to know the name of the candlesticks. What you need to know is if this pattern forms and it's at a key support level, it's going to spike. 3 bearish red candlesticks. They are slanted. They are dojis. What happens on the 4th candle? It spikes. Look at this. This is today. You see how that looks identical? That's today. It looks identical. This is February 24th. This is today. It's the same thing. You don't need to read books. You need to visually identify trends. I didn't even know this was bullish. I didn't know this was bullish. When I saw this pattern form right here, I didn't even know it was bullish. When it was forming at support, I went back to the 30-minute chart. So what I do is I go back to the 30-minute chart, right? So you can go intraday, you can go really far back. Go so far back until you find something, but only do this at good levels. Only do what I'm telling you here at good levels. You can go back to 90 days, 30 minutes, and you can look for some sort of pattern. So look right here. This is the pattern. It was at support, and you want to do this at key levels. You have to plan this out in advance. You have to plan out key levels in advance, and then you have to wait for some sort of 30-minute pattern, right? So this was the pattern, right? It looks bearish, and people were saying it's bearish, but guess what? I kept going back throughout the 30-minute chart, and I saw right here, if we go to February 24th, this right here is February 24th. And I said, okay, what did it do when it formed the same pattern? Well, this is the pattern right here. If we go to February 24th, you can visually see it's the same pattern. Look at this, man. Look at this. These 3 slanted red bearish wicks. What does it do in the 4th candle? It spikes, and I get in and I get out, and that's the game, man. So start going back. So write out your levels. See all these price alerts. These are my levels. Some of these are the best setups to the best prices. Those are the gap levels. Some of these are oversold and overbought levels where we can see short-term moves, right? And then I'm looking for 30-minute candlesticks on not the best levels. I'm more of the lotto trades. On the best setups, the best prices, I just get in. I look for 1-minute and 5-minute candlesticks, and I kind of just get in with less of a confirmation. Like I said, my confirmations were previous resistance should bounce because it had a massive breakout, gap close reversal, and 3 p.m. spike. It was already confirmed before it even hit the price. That's why I was just buying. On certain trades, I don't even use a real-time confirmation. My confirmation was previous resistance should react to support, had a massive breakout, gap close reversal strategy, and 3 p.m. spike. Those are my confirmations, right? On other trades, I'll use strong confirmations. I'm less lenient. I'm less strict with the best setups to the best prices when it comes to lotto trades that I don't recommend small accounts to do that aren't at the best levels. I like to focus on oversold and overbought levels, and I use 30-minute patterns for those. I use 30-minute 30-minute candlesticks on those, I use very, very strong confirmations for the trades that aren't the best setups for this prices, which is something that I would encourage anyone to do. But you can use these 30-minute candlesticks for your key levels you're trading at and for the best setups for this prices. You can use them. But what I'm telling you is the best setups for this prices, I really just use the 1 minute and 5 minute chart. But if I see a 30-minute confirmation or pattern, that will give me more confidence to take the trade. Like right here, we saw there was a gap to fill at 407.30 at resistance, and we saw bearish confirmations, and we played puts. If you go back to my videos, we brought a lot of awareness to this bearish pattern. You could see it happening if you go back to my videos and watch the playlist that's going to teach you the strategy. Right here, SPY gaps up. You see the gaps up, it gaps up right here. SPY gaps up right here, it gaps up right here. When it forms that first red bearish candlestick, what does it start to do? It drops. Right here, it formed that first red candlestick. It did have a small little rip up, but overall it dropped, right? I used the 30-minute candle to confirm it was bearish, but I was using the gap close reversal strategy as well, right? So it gapped up, first 30-minute candle bearish at resistance, you bought it puts. But I also said there was a gap to fill right here, and this is the best setup. Right here, there was a gap to fill above at $407.28. As you could see, this was the exact peak. We played puts yesterday. We're able to use the strategy both ways. I bought puts because the 30-minute candle was bearish, right? But with best setups of his prices, I use 1 to 5 minute. If there's a 30-minute confirmation, I'll just be more confident in the trade or possibly even re-enter the trade. But that's the game, man. This is the information. Watch the playlist. I'm going to leave a link down below. It's the second link in the description. If you want to be a part of Traders Society, it's the first link in the description. If you want to join, it's one-time fee, it's lifetime access. In terms of my trading plan for tomorrow, very, very simple stuff. So visually, how does this look? Well, I'm gonna tell you. On the daily chart, it looks bearish. This looks bearish, but it doesn't look super bearish. This is what I'm seeing. I'm seeing something like this. You see how there's this red bearish candlestick right here. See how there's this red bearish candlestick right here. And then you have this big fat red candle. Then you have this big fat red candle. See how there's this red bearish candlestick right here. And then you have this big fat red candle, right? Red bearish candlestick right here, big fat red candle, red bearish candlestick right here, big fat red candle, right? What happens on the third day? The third day, it sells off and then it recovers. The third day, it sells off and it recovers. Based off of what I'm visually seeing, it's going to try to drop and then recover. So knowing this, what's going to be my focus? My focus is going to be buying the dip at the best support levels possible. So in terms of your best support levels possible and where this should spike, let me go over that level right here. I'm going to show you how I came up with these levels. Now, this is not the best setups at the best prices. This is just a lotto trade, so these aren't the best plays. But I'm going to keep an eye on this 394 and 392 to 393, this zone right here. Your best level possible would be 392. I doubt we're going to go that low. 394, 395, that would be nice. It's also going to try to bounce right around here at 396.70, but that's just too high in my opinion. In terms of where we're at though, despite what I just said, and again, what I'm talking about right now, this isn't like best setups, best prices. This is nothing special. But what I want you to understand is we filled the gap and it had a little reversal. The strategy worked. We scalp calls. There's nothing there now. Now there's nothing there. But 398.26, this will be a gap level for tomorrow where the SPY closed at. 398.27 right here, that's make or break. Right now, what we know is previous resistance reacted as support. We had a small spike. It wasn't super strong, but it was a nice quick spike for calls to bank on for scalping. That's what we do. 398.27 is make or break. If it cracks, we're going to drop to around 394. We should bounce off of 394 to 393. I'm looking to hit calls as a lotto trade. That's not the best setup at the best price. If we gap down, we go bearish. Best price for puts is 398.27, which is previous support. Is that an attractive level for puts? No, it's not. It's not a good level for puts, 398.27. It can be for the day. For the day, it can be. Overall perspective, it's not. Overall perspective, if it ever goes back to 408, we're going heavy on puts. You just got to wait for the best sets of those prices. I didn't know it was going to go to 398 today, but I waited and I bought the calls and I banked on the calls at 398. That's what you got to do. You get an Apple Watch, you set price alerts on TD Ameritrade, Thinkorswim, download the app, it notifies you and vibrates. You can do that in your sleep. You could be taking a nap and then your price alert triggers, it's vibrating, it wakes you up, you get a ringtone, and then you're back to trading the best sets of prices. You're back in the game. That's the game, right? So that's what you got to do, man. Just trade the best ones. So what I'm telling you is 408 is the best level for puts. Gotta wait. Right now, we're at make or break support. It worked. It reacted as support. Based off the daily chart, it says we're going to drop, and then we're going to try to spike. So basically, what I'm seeing for tomorrow is I'm seeing more of lotto trades. I'm not seeing best setup at best price. I'm seeing more of a lotto trades. Now, if that pattern doesn't repeat, say it gaps up and you see a floor at 398.27, you try calls. Max pain on calls there is 397.50. You do not risk a lot. It already worked in a sense. You don't want to keep hitting it, right? So I'm seeing more of a lotto day, and if we do gap down and if we do go bearish and 398's resistance, then what the main play that I'm seeing is I'm seeing calls, and I'm seeing calls at 394s. 394s to 393s should be a good entry for calls tomorrow. That zone, you kind of just scale in a sense. 398 is make or break. The daily chart says it's gonna crack, and we're gonna try to drop to like 394s to 393s. That's the call zone, but that's a lotto trade. That's not best sets prices, right? So tomorrow you're gonna need a lot of professional guidance if you're gonna trade tomorrow, and these are lotto ideas. I wouldn't even trade them in a sense. If you want, you could scale back in size, or you can just practice paper trading them on Webull. That's a real-time options paper trading platform on Webull. Thinkorswim is not real-time for paper trading. It's not good for paper trading. But yeah, I'm going to leave it off at that, man. I'm being very, very honest. The best setups of prices do not come every single day, and that's where we're at in the market. 398's make or break. Daily chart says it's going to crack. If we crack, I think calls are going to bank towards 393, 394, but that's a lotto zone, and you got to be a professional. You got to be already successful to really focus on the lottos. You guys need to focus on the best setups at the best prices. What did I tell you in yesterday's video? I told you, buy calls under 398. If you bought calls on 398, you bought the low of day, you made money. You did very, very well. If you didn't do that, you didn't make back the cost of Trader Society before joining. You didn't make money in a sense, right? I also said, wait for puts at 408, and then 404 was make or break, but that was the shitty level. I actually played puts at 403. That was a lotto trade. Man, my first trade of the day, I alerted puts at the exact high. This was a nice one. I alerted puts right here at the exact high. At the exact high at 10:36 a.m., I alerted puts when this was at $403. That was a nice trade. The reason why I did that was we had a massive sell-off, and it was spiking back to previous support. Your previous support was at 404. So the best entry was 404 for puts. That's actually a decent entry for puts at 404 for an initial scalp. If you want to write that down, I'll set a price alert there as well. Once we go back there, just for a quick scalp, that's not best setup, best price. But I hit puts because it spiked back towards previous support and already crashed, and we formed a bearish doji. But that's not the best setup, best price, right? But you can use what I'm teaching you with the best setups, best prices. And I would encourage you just to trade the best setups, best price and to compound your account. That's the game plan. That's the plan for tomorrow. If you want to be a part of Trader Society, this is the best time to join. It's a one-time fee. It's lifetime access. You get access to live trading streams, the voice channel. You get access to the people within Trader Society who can help assist you, the moderators. You get access to the video lesson library, all of the courses, all the video lessons on how to use the gap trading system that I've created. You also get access to the real-time trade alerts and the key levels in the trading plans. It is the first link in the description. It's a one-time fee, and it's lifetime access. If you want to learn more about the strategy as well, you can watch the second playlist, link down below. With that being said, guys, I'm going to be signing off here.